And a bad day on the local bourse. Earlier, I spoke to Charlie Aitken from Bell Potter. Well, Charlie Aitken, 4 days into winter and the discontent has been palpable on the local share market.
Yes, actually almost considered wearing a hard hat and a safety vest to do this interview, Ticky, but I thought better of that. We'll get through winter. But look, unfortunately, nowhere to hide really today. Most of the leading stocks under heavy pressure after the offshore lead. And obviously the S&P futures again pointing to another bad night, so we just couldn't get out of our own way. But you're dead right, winter has started pretty ordinarily in weather terms and market terms.
Now, the worst hit were the energy stocks.
Yes, energy stocks all getting hit down about 4% or so across the board. The oil price down about 4%, so they're matching there. There did seem to be a switch out of oil into gold in America on Friday night, and that was replicated in the Australian equity market today. But pretty much indiscriminate in the oil equities today, all down 4.5%. But if you think about it, the oil price falling is actually a good thing for consumers eventually, but that didn't matter today.
OK. Telstra, on the other hand, has emerged as a bit of an island in the storm.
Well, Telstra was about the only top 50 stock physically up today, up 1% to 366. One of the key things today, Ticky, was the long bond market in Australia down to a 2.74% yield for a 10-year bond. 3-year bonds yielding 1.94%. They're record low yields. So anything with a decent equity yield actually saw some support today, and Telstra is the obvious alternative to bonds, and it saw, some sort of support today.
Now, the other stock clear of carnage, for today at least, was Brambles, because it was in a trading halt, the industrial pallet company. It was unable to get a suitable price, we hear, for its information management business recall. How might investors react tomorrow, do you think?
Well, it's interesting. I think they'll still be trading halted tomorrow, so it's a bit of a... bit of a godsend for the company. You usually get a couple of days to be halted to sort out capital raisings. I think this was a little bit of a surprise. I think the market was expecting them to sell recall and then have a little bit of extra cash on their balance sheet. But clearly in the global conditions we find ourselves in now, it's almost impossible to sell assets on a trade sale basis. So, look, probably a little bit of a godsend for the company that they were in trading halt today. The stock probably would have been down 3 or 4% like all other cyclicals today. So we'll see what comes. I think the deal will be supported at a price.
And so what's your take on what the Reserve Bank might do tomorrow with rates?
Well, it's going to be interesting. The bank bill market is telling you there's almost a 90% chance of a 50-point cut. But back-to-back 50-point cuts would be a sign of panic from the Reserve Bank. That's genuine panic. Look, I think there'll be a rate cut tomorrow. Hopefully it's 25 points. But I think that the market expectations are a little bit more than that. So we probably need to see 50 to get the share market off its lows. So we'll see what comes.
Charlie Aitken, we can only wait and see. Thank you very much for joining us.
Thanks, Ticky.